Hello and welcome to today's brief follow-up video, which is called Stagflation. Obviously I'm referring to the consequence of University of Michigan and services data that we had arriving. I will be linking to the presentation going through these slides and some more centered on stock market. Right now I will show you this hourly chart with the 2-hour slant exacerbating the usual retail gains at the open. On days like this, when I had called for yesterday's setback to be swiftly reversed to the upside and today's regular retail setback with fresh fuel poured on the fire in the way of risk-off bearish leaning data that are hitting consumer confidence and consumer inflation expectations, it makes just the best sense to rely on real-time comprehensive information. And those who are daily signals clients or at least intraday channel, so as to identify the swift intraday turns, have such a great advantage over free followers and subscribers. So let me just invite you, as the new month is starting, to take advantage of what kind of resolution are we going to see in the larger structure. Tomorrow we will be getting weekly data nicely charted and the progress of the weekly bullish flag breakout and some kind of a rejection, because following yesterday's retracement higher of the retail flush that I expected really a flat day characterized by internal rotations, which is what we got in the end. Never mind the risk of bias and heavily defensive posturing among sectors. We are going to see a retracement, rejection of the upswing when it comes to the weekly bullish flag that I discussed prior weekend or the weekend before. You know that the weekend videos are most extensive ones, so treat yourself to examining these from the start to the end, because I seek to back them with actionable information and raise the very right questions. So looking at this hourly chart, the leading hypothesis of seeing a decent finish to the week and no more Friday's flashes is looking a little bit suspect. Consider that an hour ago buyers had and stood a decent chance of securing a bid. You see those 3 support levels that I gave you: 6135, which was the weakest one, 6125 to 6115 was a more decent zone. And what levels did I give premium clients since then? 6088 coupled with low 6090s. That was for today. And on the opening flush this was respected. But are we going to see a retracement, or are we staring at a bearish flag on the hourly when it comes to S&P 500? Yeah, that's the point, and I bet you can sense my answer and that you understand that even swing trading clients have played this setup with a very tight stop loss, measuring no more than a dozen points of ES, as justifies the late session run up to institutional buying that we got so accustomed to see in the prior days. This can still kick in, however, compare the sectoral overview. What kind of messages is it sending right now? And compare that to the hourly chart of Nasdaq. You may know, in case you are a premium client, that I had featured quite a few ratios measuring individual sectors to S&P 500 in today's premium analysis. Are we seeing them confirmed with today's price action in Nasdaq? Thus far, the answer is not really. So this gives you a preview of the building blocks of solid analysis and solid decision making that premium clients are getting. So do treat yourself to quality analytics. New month is starting, and in case you join in the latter days of this month, I will disregard that and you will get a couple of days extra of free premium access, provided that you remain throughout March. My join page to help you select. Once again, I highlight the advantages of combining daily analytics together with intraday premium channel. Thank you, and let's talk soon again.